to another episode of Poor vs. Standard. Poor here, as always. Everything within this podcast, our opinions and otherwise, are to be considered entertainment purposes only and not financial advice. I am not a financial advisor. I am not a cat. And let's get into it. So, I just want to hit us up with the news, as we haven't done that in a while. So, we're going to go into some news stories, and I just want to say that there's been, for the last couple weeks to a month or two, a noticeable dip in the viewership, and that's probably because there's been a dip in the markets. And those that stick around are going to be rewarded. But so much of the news that I've covered recently has been for the squeeze and crushing of shorts, and as fun as that is, there are other things happening in the markets. Overall, it's been a little dry until this week. And I can tell that it is because I'm not the only one suffering from a dip in viewership. Other podcasters that I've spoken to, other YouTubers that I've spoken to have felt the same effects, and that's basically because when the market goes down, people, dip out and leave, and they say, it's a scam, we're just going to go. And so those that do stick around, they will be rewarded. And it's an interesting thing that I've found over the last couple months. You guys who are hearing this now, and when I'm shortly after I release it, are going to be ahead of the curve. But I just want to let you all know that I do vow to continue to bring you the headlines and stocks associated with the squeeze plays, though it is exciting and stuff and fun to cover. I'll still try and bring you guys actual news as well. So with that, I just wanted to talk to you guys about some of the latest news. So with that, let's get into it. So the highlights from this week is that the recent infrastructure bill that had bipartisan Senate support for over $900 billion, there's a few takeaways from it as far as the spending goes. Almost every line item on it is going to require steel, and steel is already jacked up as far as the prices go. And to do American infrastructure, you are not going to see the U.S. government spend any money on anything other than U.S. steel to do these infrastructure projects. Walrus Street, the Walrus from his YouTube channel, just released his take on that whole steel companies and his pick as a beneficiary, along with other stuff. The second thing is that EVs are going to get a lot of infrastructure money, so companies like CleanSpark and ChargePoint and EV makers themselves are going to get a boon from this once they, if and when this infrastructure bill gets passed. There was apparently some round table talks as far as what this is all going to entail and how to pay for it. And if you care to take a look, there's we don't need that. Yeah, the Transportation Secretary Pete Buttigieg, some of you may know him as Mayor Pete, as he was the mayor of a town you may have heard of in California, and not really well liked because of the roads there and the massive potholes, but that's another thing. He likes trains. But yeah, the Transportation Secretary floated the idea of putting a per mile tax on vehicles in order to pay for portions of this new bill, and recoup money that the government will be losing by promoting electric, because gas-powered vehicles won't be there taking up as much gas. So in many states, there are over $1 per gallon taxes between the federal and state taxes on them. I know in New York and PA, they have taxed our gas into oblivion, and New York just added another 55 cents of tax to the gas when the pipeline debacle happened, and it wasn't a temporary 55-cent hike. So I digress about that, but suffice it to say that this idea was floated in order to pay for this bill if it passes. But at this point, there is no such proposed tax yet. But now that it's out there in the ether, and it's been talked about by Pete, and It will eventually be drafted on some House bill, I'm sure. It's only a matter of time before the government finds a way to screw you and tax you even more than this. Uh, and this tax would encourage the purchase of electric vehicles, because if you drove an internal combustion engine or an ICE vehicle, then you're going to be charged for tax on your gas, and then you're going to get that per mile tax as well. So you're going to get double taxed. Whereas if you drive an electric vehicle, you're only going to be taxed the per mile. Oh, and the electric, I guess, you use to charge your car when you plug it in. So it's not good for anybody. The problem that they didn't really think through is that currently, and probably for the next decade at least, you do not have the infrastructure set up. And you do not have the capacity to build inexpensive electric vehicles. I mean, you look at Teslas and things, any electric vehicle you find is in like the $30,000 range. And there's not really a big secondary market on electric vehicles yet. Yeah, and aside from not having actual like charging stations like you do gas stations built, and the other fun fact is that we don't even have the resources required to build the batteries for that many electric vehicles. There is a finite amount of lithium in the world, and that many batteries would be very taxing on it. So if anyone can design a saltwater battery that functions as well as a lithium battery, or a non-lithium battery that is a solid state battery that works as good or better as current battery technologies, there will be a boom in the EV stocks, and whatever company cracked that battery nut and whatever scientist figured it out will probably deserve some type of prize. But until then, I mean, it's, you don't have the infrastructure, you don't have the capabilities to have that many electric vehicles on the road as there are ICE vehicles. So that's basically what I got to say about that. The Russell recombination has officially occurred. So, hooray, hooray. And yeah, one stock of note that we did send out a tweet about is that GameStop was added to the Russell 1000. Now, the Russell has the 1000, 2000, 3000, and obviously the lower numbers are more selective in the criteria to be added. And as we've discussed, some of our stocks were added to some of the Russell indices like Sense, CTARX, and Palantir, along with a few others. And we'll see where this kind of goes and where it takes us. And this last week was unusually green, so we'll see what this week brings ahead for some of these stocks that were added. Now, as far as the squeeze plays like GME, AMC, CLOV, among others, the hedgies and CNBC mainstream media keep trying to convince you that squeeze is done. Go home. There's no reason to cover these stocks anymore. The meme stocks are dead. But if you just take a look at the short data, that would indicate an entirely different story than you're being told by these people. I mean, the shorts aren't covering. And the problem that I see with a short squeeze is that some retail traders don't realize that they are not just short pops and drops, but many months long battles, and where shorts have to unscrew themselves from being too greedy by buying the stock back. That takes a while. Like, they didn't just wake up and short these companies 50% in a day. They did this over the course of months, and they sure as shit are not going to cover these things in a day. But you can rest assured, those who are holding long positions in AMC, it doesn't cost them anything to hold those shares. Short positions, however, they're paying massive amounts of interest, which is screwing them even harder, and eventually they'll either decide to cover or they'll be forced to cover if they get margin called. Right now, they think that they can outlast retail, and retail will lose interest at the current prices and it will go back down. However, if you take a look at GameStop, it never went back down to its original $6 to $8 range. And I doubt AMC will do that either. I mean, I'm pretty sure CLOV's probably going to follow suit as well and gain massively on all these hype plays. And I don't have a crystal ball. and I am not unfailable, so these things could happen differently than I see them happening, but doesn't it just make sense that if retail is cohesive as a unit and they all stick together and they just don't sell, eventually the shorts are going to go bankrupt and have to cover. There's no way around it. And if the shares aren't there for them, then these prices will go parabolic. So that's all I got for you with news. So let's get into the crypto update. What do you say? So crypto, as you can see, we've been in a bit of a bearish crypto sentiment, crypto bear market, crypto winter, whatever any idiot is trying to call it these days. But it did dip down into, Bitcoin did dip down into the $28,000 range over the last couple weeks here. And, well, as you can see, currently we're up to about 34,400. And I hope you use the dip to buy, because, I mean, I like that it dipped down that low because I was able to load up, but it's also one of those things where I could see it going lower still. And there was some discussion of the fact that China is putting the hammer down on any crypto whatsoever, not allowing people to use it to purchase goods and services, and they're not allowing banks to, deal with anyone in a crypto related manner. So it's pretty much like, what can you do with it other than leave the country with it? So it's super funny that how do I say this? The, countries that have the least freedom are the ones that are banning crypto the hardest, or trying to. And the more free countries are the ones that are still allowing it and, trying to work with it. And that's going to give those countries a leg up in the long run too. So honestly, there was this huge sell-off and shit show for crypto when Elon mentioned that, they use a lot of coal to mine Bitcoin, so it's not eco-friendly, so we can't be seen to deal with that. And then all of a sudden, he's like, well, we've changed our mind on that opinion because all of these American crypto users use a lot of renewable resources like solar and things like that. And so the ones who were using coal to mine Bitcoin were the Chinese. So without the Chinese mining it, the equation changed, and Bitcoin's suddenly a lot more green because the countries still mining it are the ones using renewable energies. And the other funny thing about that is you have more. How Bitcoin mining works is the equation gets a lot more difficult to solve the more miners there are. So if there's a huge swath of miners that just stop being able to mine, like in China, it will eventually make the math easier so that it averages out to 10-minute blocks for the rest of the mining pool. And so the rest of the mining pool will now get greater rewards. So stocks like Riot and Mara that are mining Bitcoin, if there's a bunch of hash rate missing, they're going to be rewarded on a far greater scale, because as some of the largest mining companies in the US and the world, they have a lot of hash rate on what's left of those nodes. And eventually more and more hash rate will come back online, and it will come back with probably a renewable resource, and in other countries than China. And that is what secures Bitcoin. So it's very elegant and it's designed that way. But in the short term, you will probably see Riot and Mara benefit by how much Bitcoin they're actually able to mine. So, sorry, that's a little bit of a tangent on the Bitcoin part, but I figured it was necessary to talk about with you folks because some people don't know these things. Moving on to Ethereum, just under $2,000 at 1970. Cardano at 131, almost 132. It really likes that level. We've talked about it almost every single episode. It's right around there if it's not at the 150s or above. So if it ever dips back down like it did recently where it was almost $1, load up. That thing's going to $10. I'm not telling you what to do with your money. I'm not a financial advisor, but that's what I'm going to do. And Dogecoin is roughly worth 25 cents. So there's your crypto update for you. And yeah, I did want to let you guys also know that there was Microsoft managed to join Apple in the $2 trillion club. So there is that. And they are two of three companies that have actually joined it. The third company joined it and then left because its stock got dwindled a little. An oil company, I forget what it's called, but yeah, so currently the only two multi-trillion-dollar companies in existence are Apple and Microsoft. Go figure. Who saw that coming? And a lot of people believe in the next decade plus you're going to see both Apple and Microsoft at the 6 to 10 trillion range, which would be very impressive. And I don't know. That is more than that's more money than a lot of countries are worth. It kind of scares me, but what do you do? Yeah, so there's that. And yeah, Microsoft is currently worth $265. So as you can see, it is currently 11 o'clock while I'm recording this. So after hours markets have kind of opened, we can see the futures. And futures look green, up a little bit. That can definitely change. S&P's hitting all-time highs. Crazy stuff's going on. So, as far as the swinging for the fences play, what I want to do with you folks is discuss what I'm going to try and do. I actually found one that is currently worth exactly just about $1, where I'm going to put a bid in for $1. It is a June 22nd, 2022, $12.50, $15 call debit spread for Clean Spark Energy. As we discussed about the infrastructure bill, if it hits, this will probably be well. Plus, right now, this is already in the money, so it's not so much a swinging for the fences play as a play that I'm just recommending for everyone. It's pretty great because right now, if you do this by buying the $12.50 strike and selling the $15 strike, it costs you $1, but you're getting $250. So you're more than doubling your money, and the risk to reward seems pretty great right now. So if you can get it for around $1, that's excellent. If not, well, that changes the equation a little bit. But yeah, it's pretty good. And as you can see, if you're watching this on YouTube, it's actually already in the profits, which is cool. So if it stays around there, that's cool. You might be able to play with the date a little and see if you can get it, different prices. I think Clean Spark is going to go up significantly on the passing of that bill and on the rewarding of some contracts, which is why I was thinking to grab some of these calls on Clean Spark Energies and on the other one that I wanted. What the hell did we discuss? It's drawn a blank right now. It's late. I'm apologizing. But the electric vehicle infrastructure plays and the electric vehicle plays, I think will do well. And you can say they're a scam, or you can, see the fact that the government is backing them immensely and just try and take advantage of the fact that government money is a big indicator of where these things are going to go, because they're going to get subsidized just like Tesla did for all those EV credits. So play around with the options on these until you find something you like that's in your wheelhouse and in your budget. And yeah, there you go. So watch me on the excuse me, man, I am just falling apart right now. Do feel free to watch us on TikTok, as standard is there. And do make sure to catch the Twitter, is what the word I was looking for. Our Twitter handle is vs_poor, so that you can see when I buy and sell any options trades. I usually try and keep those up to date. I'll usually send out the alerts a little bit later than I do to the patrons. And if you do want to become a patron, feel free to join us at patreon.com/PoorVStandard. And you can see all these links in the episode notes. So with that, thank you so much for sticking around. Tune in next week for our 1-year anniversary. And a happy anniversary to America as well, because it's July 4th. So that'll be a special episode. All right, with that, I thank you. Have fun, trade safe, enjoy your week, and have a good night.